Good morning. It's Thursday, October 19th. What a day. There is so much going on, so many huge catalysts. We have, we'll get to in a second, like Tesla really bombed, Netflix really blew it out of the park. We have jobless claims coming in better than expected. That's good news, which is usually bad news. Good news is bad news, but the market's actually not reacting to it that way. TLT and markets actually went up on that little that just came out at 8:30. Surprisingly, Powell is speaking at 12 p.m. And also the war stuff is for the moment there's a lull, um, geopolitically after that bombing the hospital is proven not to be Israel. Everything's kind of calmed down. The ground invasion didn't start, so now we have this kind of window where I think things are trading on earnings. Okay, so we got lots of big earnings reports. We'll discuss that. We also had TSM. So let me just quickly look at TLT. So TLT, look at this. This is unusual. Since 8:30 a.m., usually this goes down on good economic data. That's usually what happens. We had good economic data this morning and it went up. I don't know how to explain that, okay? Honestly. Um, I was thinking, oh my gosh, all right, jobless claims better than expected. TLT will go down, KRE will go down, IWM will go down, right? But right now, I guess the bigger story we're focused on is going to be the earnings, okay? So you can see QQQ is up. I don't know, again, is that a macro thing or is this because Netflix is up so much? Got to combine in there Tesla being down so much, but look at this. Soxel, TSM, we'll go over TSM earnings in just a second. TSM earnings really, really good. TSM set to have a good day, and a lot of semiconductor stocks are doing well in pre-market, as you can quickly see here on our semiconductor list. Here we go. TSM up 4%. You see lots of green over here as well, reacting to that. So Soxel may have a good day because of the TSM earnings. So now let's drill down. I guess we're not going to worry today about macroeconomics, geopolitics, the war. That's not the theme for today. All right. That's not going to be in any of the top five. The defense stocks and the gun stocks and all that. Although we'll see if they catch up and do well, and we have some swing. All right. Where do we even begin? Oh my gosh. Wow, like what's going to be the number one pick with these big, big gaps? I'll tell you right now, just looking at this, the thing I like the best right now is TSM in pre market here because that has not had a gigantic move yet. And relative to the earnings, and 93.39 at the ask, I think that's still maybe a good deal. Where do I start? I got to start with Tesla. Okay, Tesla in the app. We were telling you last night we're shorting this. I'll get to why in a second. Let's just look at the technicals here. It broke this key support last night. We're looking at 234.58 after that terrible conference call, and also they missed on the ER. Okay, so now we're below that. So for me, the target is the bottom of this candle, which is 212.36, which coincides pretty much perfectly with the 200 DMA at roughly 213. So roughly 213, a double support, and then look at these gaps in here, which is around 220. Bottom of this, 220. So 213 to 220 is actually my immediate near-term target on Tesla. Honestly, longer term, I wouldn't be surprised if it breaks this 200 DMA, and we could be back for a difficult time for Tesla bulls before we turn things around again, and things will turn around again. But what happened here? Oh my gosh, man. Quantitative issues and qualitative. Okay, quantitatively, they missed. Okay, they missed on the top line, they missed on the bottom line. Margins were a miss. Let's check the magnitude of the miss for 1 second. All right, the magnitude of the miss. I got to scroll down here. Actually, I did write it down somewhere in my gibberish. Okay, here we go. 66 cents, misses 73 cents, and then 23 billion, misses 24 billion. Now, 66 and 73. All right, if you just do the math on that, not a huge deal. Why are we down more than that? I'll tell you right now. Okay. Wait a second. Is it 10%? More than I thought. Anyway, 66 minus 73. No. Hold on. 73 minus 66 divided by 73. Okay, 9.5%. All right, even more than I thought. Okay, but anyway, but that's not the only thing that's going on. They missed, margins down, but that conference call was horrific. It was the worst conference call from Elon Musk I've ever heard. There was only a couple silver linings in there, but he's talking about, oh my gosh, he's talking about Cybertruck. We dug our own grave. It's going to take 1 to 2 years for that to turn cash flow positive. He's talking about the law of large numbers and how it's going to be hard to sustain a 50% CAGR because of the law of large numbers. He's talking about interest rates is really just terrible for them, and how are people going to afford cars with high interest rates. He's talking about 2008, 2009 was a freaking disaster, and he's kind of thinking about how he can protect the company from bankruptcy if like a 2009 scenario happens again. I mean, this is what the conference call was about. It was a nightmare. They're talking about not really moving forward, on the Mexico plant they're building until the interest rates get lower. I mean, it was a cluster F. All right, you know what I mean. All right, so that was really, really bad. And then here's the other thing you got to look at. Oh man, there's few interesting data points here. All right, going back to that 66. Let's say we annualize at 66 cents. Okay, that's 264. All right, where's the stock price? That's an EPS of 264. If they do the same thing they just this quarter, right? You take 226 divided by 264. That gives you an 85 PE. That's even higher than Nvidia. Like nothing has an 85 PE right now. Okay, now it's Tesla. It gets a sentiment premium, right? After that conference call, that sentiment premium is going way down. People aren't going to give it the same sentiment premium as it had before. Okay, another data point. All these analysts are coming out. It's ridiculous. All right, let me give you one example, but I've seen at least 3 of these. Wedbush did it. Dan Ives is guilty of this. He said 350 to 310. But let me get, what is he guilty of? Let me give you, I want to go to the CFRA, and there's several of these analyst reports. CFRA, we lower our price target by $10, right? From $310 to $300. This is really funny, all right? They lower their price target by 3%. Okay. And then why are they lowering their price target by 3%? Because they're adjusting their EPS down by, looks like 7 or 8% in 2023, by over 10% in 2024, and by what's $1 divided by 7, 1 divided by 7, and by 14%. Okay, so they're adjusting their EPS down by like 10 to 14%, and then only a 3% reduction in the price target. Who are you kidding? They're not the only ones who are doing this. There's lots of analysts playing this game out there. To me, this is a massive warning sign that off guard. There are a lot of people, a lot of institutions with big money in this, lots of clients, whoever it is they're trying to protect. When you come in and you slash EPS by that amount, they're not the only ones, and then you only trim the price target by a little. I'm sorry, folks. They're trying to play a trick on you. All right. This thing is heading down. Now, it's a little bit tricky because it's gapping down. So, at the open, is it going to pop first? Is it not? I don't know. So we've been shorting this since 235 last night. So we have a little cushion to play with. All right. We have a little cushion to play with in terms of, buying puts at the open. So, we'll probably buy puts in smaller size at the open. And then if it starts going down, we'll add more. When it hits resistance levels, we'll add more. So let's just quickly look at some possible resistance levels. Well, the pre-market high of around 230, that's a resistance level. The real big one I talked about earlier, if it manages to get to 234, that's your resistance level. So 230, 234, a couple of resistance levels. Man, can it get to 242? I really doubt it, but this stock market's crazy. You never know. All right, that's possible. But if it does, I think this thing's eventually coming back down, maybe even today, all the way to my target area of 213 to 220. Could be a very, very wild day for Tesla. And then you never know. Is it going to break those supports? All right. Netflix. My gosh, it's 9:10. What am I going to do here? Wow. LNN. Finally, a trade went through. A trade went through at plus 13%. Okay. That's the first trade of the day, really. Every other one was under 100 shares, but now we have 180 shares trading at 121. I'll get to that. All right, TSM. All right, TSM, beautiful earnings report. We'll get into the numbers in just a second, but it's gapping above the 200 EMA. Good for stock sold. Another way to play it today. And then maybe that's something we'll do even as a hedge against Tesla. Let's say for some reason markets explode today, QQQ explodes, and maybe that takes Tesla up with it. Maybe a good idea to have something like a Soxel levered thing to the long side as a hedge on this TSM theme. So why? What happened here? TSM, let's dig into this report. All right, TSM 129 beats 117. All right, let's just look at the percentage, the magnitude of the beat there. 129, no, minus 117 divided by 117. Okay, 10% beat there. We got a 10% beat on TSM. Now, in terms of guidance, I don't see in the headlines here an EPS guidance, but they gave us a revenue guidance. So they did this beat. They did $1.29 on 17.2 billion. And then they're guiding Q4. The midpoint of Q4 is 19.2 billion versus 18.6. 19.2 versus 18.6. 19.2 compared to the 17.2 they just did. They're saying the revenue is sequentially going to go up by $2 billion between Q3 and Q4. They just beat 129 to 117. All right. That's, you know, I don't have the spreadsheet here. I'm not the fundamental analysis, you know, it does things based on a strict interpretation of what a stock should be worth. But you can see from those numbers there that it's basically a blowout, right? It's basically a blowout for this quarter and the guidance. So TSM, we're long shares on this. Man, something I might want to play calls on today. We'll see. We'll see what becomes the number one pick. Let's keep going. LNN. What a freaking blowout. Oh my gosh, from LNN. $1.74 beats 111. Are you kidding me? That's like 50% beat. Sales beat by, what is that? About 7%? 10 million divided by 157, something like that. Massive beat. Let's go into the guidance. The guidance, they give qualitative guidance, not quantitative. You scroll down here, go to, where's Outlook, all right? Outlook, all very positive qualitatively. Current commodity prices and U.S. net farm income projections, although lower compared to the market strength seen a year ago, continue to support demand for irrigation equipment. We're seeing order levels running ahead of the prior year. We expect sales volumes levels in developed international markets to remain robust, led by strong demand in Brazil. We continue to see project opportunities in developing markets supported by continuing global concerns over food security and global grain supplies. We expect to see a more meaningful positive impact of increased U.S. infrastructure spending in our infrastructure business in fiscal 2024. All right, so massive beat, 50% on the EPS. Okay, this stock has been absolutely demolished. You can see here, if you go to like a 5-day chart, I would almost like kind of erase in terms of what's our starting point. Like, where can we get this stock? You can kind of erase what happened yesterday and say, okay, like your break even, like is, when I say break even, I mean like the stock didn't do anything yet. The stock didn't even react to earnings if it trades, you know, in the 112 to 114, 115 area. It still didn't even do anything yet, right? And that's already a big percentage move. I don't know what sparked this move down yesterday. Like people are scared for some reason. But let's look at these resistance levels. 20 DMA at like 115, 50 DMA at 120. Just gap up. It is. They're just about to say. This thing might just gap up over the 50 DMA at the 9:30 a.m. open. All right. It's done it here in pre-market. Let's go look further out. We gap up above the 50 DMA. Top of this candle here, 129. Top of this candle here, 128, 129. Then we got the 50. So I don't know, man. I could see this thing going pretty quickly to 125 to 130 today, possibly right out of the gate. All right. And then we'll see. We'll see if it breaks that 200 DMA. It certainly could. From a fundamental perspective, you're talking about a PE of 16. All right. It's been sporting a PE of 18. And going into today, we're talking about PE of 16 if you sequentialize the earnings that just happened. So LNN, another possible big winner for today. TSM, I like it. TSM's probably, again, I'm just going to reiterate, TSM's probably my favorite because of the gap. This gaps make these crazy to play. I'm making TSM first right now just because it seems like safer to be able to, you know, do like all options at the open on this. Like Netflix, you really want to get call options at Netflix at 402. I don't know about that. I think we just sold our common shares though at like $399.50. We got in this earlier this morning. But anyway, did I fail to mention on Netflix? Did I even cover Netflix? Did I skip Netflix? I think I skipped it because I saw on Netflix. Listen, the thing here is they increased guidance on their cash flow by 30%. A 30% increase on their cash flow guidance for 2023. It's 16% up. So yeah, and lots of price targets coming in around 450 this morning, which would be basically that 30%. All right. Is it going to get there in one day? I don't know. I guess anything's possible. Look at this. Wow. So there's just like crazy news out this morning. So massive good news in Netflix. TSM looking good. You know what? I got to just seeing this price action. Maybe I'm pulled back so I can get back in Netflix, and we sold it like $399.50. But maybe okay. I think TSM is going to be number one. Netflix number two. Maybe there'll be some support levels. I don't know that we can get back in intraday. Tesla number three, only because it's a little tricky to play this. But I, you know what? I'm gonna come back to this. Let me go finish down the list and see, because I do have pretty good confidence that Tesla is going to be going to that 213 to 220 target today. Okay, so 213 to 220 today on Tesla. So let me just go down. Honestly, I think that's enough. There's so much going on. There's news on Nano Dimensions, NNDM, a $200 million buyback approved by the Israeli court. I like it here at 262. I think that's a nice little play. ChargePoint, 331. I like it here on some news of Tesla chargers. ChargePoint ramps up production of Tesla compatible EV chargers. I like that here. You know, little ancillary play. So those are both good. We're shorting a little bit of Foot Locker on Goldman Sachs coming in with a strong, not a strong, did I say strong sell or just a sell rating, downgraded from neutral to sell, $18 price target. So shorting a little bit of Foot Locker. So that's good too. And then look at Powell here. Not a crazy amount of volume. But I'm not really focused on the war plays today. All right. We have a little bit of swing in war plays. So now let's go up and try to just figure out where Tesla is. Because I know TSM is way up there. Netflix price action and that math I just did, making me think that people are doing the same math and trying to run this thing to 450. LNN blowout. I'd like to get into that, but that's going to be tough. I forgot to mention Domino's got a nice big upgrade from Deutsche Bank, or initiation on Deutsche Bank with the $430 price target. They also initiated McDonald's and I think Starbucks. So they did like a bunch of food names today with nice price targets. But Domino's, the reason I chose Domino's here is because the chart was just like death, and the price target, the differential, the percentage move to reach the price target was biggest for Domino's than it was for Starbucks and McDonald's. So out of the three that Deutsche Bank put out there, I really like Domino's, and that's something that also could be really great for options. Lots of good opportunities out there this morning for everyone. Man, this is tough. The only reason I'm putting TSM first is from an execution perspective, and this chart's just a lot easier to play. It's a lot easier to have confidence buying this in pre-market now, buying call options to open. So from an execution point of perspective, TSM's first. All right. But from like, what kind of stocks can give you the biggest return today, but just with more risk and with more, you got to be a ninja, and with more execution risk, it's going to be Tesla and Netflix. All right. Possible huge moves. These are high price stocks. The options can really pay off. All right. So, man, I'm just going to put Tesla ahead of Netflix. I'm going to swap it again, just because I guess, man, because I guess we've been in such a bear market, it's harder for me to get excited about a big move up, right? To say I want to chase. I'm just, I think that's the reason that I'm putting Tesla ahead of Netflix. Just this, been conditioned that things are going to go down. So I'd rather be shorting something with bad news than trying to chase something with good news. That's really the reason, even though the math says Netflix could make a move to 450. All right. So I'm putting Tesla ahead of that. So TSM number one, Tesla number two, Netflix number three. I know we've been saying we're going to try to do options only on our number one pick of the day, but I think on earnings season, we may have to adjust that a little bit and leave a little bit of room to do a little bit on some other plays. This is crazy. Look at Netflix. Unbelievable. We just sold it at 400. And then LNN, we'll see. Probably not going to do options on LNN because the spread is too big. You can see right now it's $11. DPZ could also work out, but I think just the news that we have on earnings much more interesting than an analyst initiation. So LNN, maybe we'll try to get in on common shares today. So TSM long, Tesla short, Netflix long at the right entries and prices, I guess the right entry has always been now. I've been looking at this since 370 last night. LNN, and then that's about it. Top 4. All right. Should we put short? Where's that short? Should we put a short in here? Also, it was the Foot Locker. Let me just put that in. Instead of Domino's, let's put short Foot Locker as number 5. All right. And that's about it. Man, I'm running late. Let me just check. I just with you guys here quickly. Let's just look at what the stocks are doing. And okay. All right. It looks like I'm not going to worry about that today. I'm not going to worry. I can't make sense out of it anyway with the TLT action. So today it's going to be fully focused on these earnings plays. TSM long, Tesla short, Netflix long, the right prices, LNN long, Foot Locker short. Let's kill it today. Maybe a little bit of long NNDM right here at 262 and a little bit of long charge point at 331. Thanks, everyone. Have a great day.